Hello, grade 12. Today we are looking at the IEB Accounting Paper 1 for grade 12 written in May 2024. So we are going to look at question 1B of this paper, which is inventory systems, and was allocated 18 minutes for 30 marks. Right. So for this question, we are looking at Shah soda values, their stock of bottles using the weighted average method. Okay, so that's one thing we need to note. And as they say that all the flavors cost the same and the turnover is faster than the shelf life. Okay, that's some important points that we need to pick up. So Shahar Soda has a delivery contract which costs 30,500 per annum to deliver all their purchases to their labeling factory. So this is what we would call the carriage fees or the delivery fees, right? So this is part of a cost of inventory, or it will form part of the value for inventory. So this is carriage or delivery fees. Okay, let's just get to highlight. So now we know that the stock records for the financial year ending 28 Feb 2023 were as follows. So this is year ending 28 Feb 2023. We need to know our year end. And then we have the bottles of soda. So they were given our opening stock purchases, and then we are also having our closing stock on the 28th of February 2023. So now we have the following information that was extracted from the stock records that we also need to take into account. Information A, they returned 35,000 bottles on the 1st of August as the leads were found to be faulty. So here we returned 35,000 bottles, so it is clear that these are returns on the 1st of August. This should link us back to when were these bottles bought. So we would have bought them in July 2022 because we were told at first that the bottles are of cold drinks, or the stock rather, is faster than the shelf life. So now it wouldn't be a great idea to say that they were bought in May, because you cannot still have something in August, but you bought it in May if something is selling faster than its shelf life. So we would then make an assumption that these were bought in July 2022 and then later returned off on the 1st of March 2022. So we also need to take into account of these returns. And then B says during the year they sold 1,575,000 units at 9 rand each. And then lastly, we have a number of bottles were given to the employees at the weighted average value as part of their year end or end of year hampers. So these are our sales. We had sales here. And then now we are going to just overlook information number two rather, because it's a complete set of questions. And then let's have a look at our question 1.2, inventory system. So calculate the weighted average of 1 unit of cold drink for the year ended 28 Feb 2023. So here we need to calculate the weighted average cost of each unit. Now remember that the formula for calculating the cost per unit, we would need to have the available units to sell, right here, and then on top we would have the cost. Okay, now we need the cost for each and every group of units, right? So here we have our opening stock, and we know that our opening stock, we had available units to sell of 350,000 and the cost was 1,400,000. So we're going to have 1,400,000 all over 350,000 units that we have had, plus our purchases, which were 1,550,000 units at a total of 5,575,000. Okay, so here we have 5,575,000, and then that was 1,550,000. So this is opening balance. This is our purchases plus the carriage fees of 30,500 that we have had. Right, so 30,500 minus returns. Okay, let's look at the returns. We had returns of 35,000, and the 35,000 bottles were worth 3 rands times 35,000. So because we do not necessarily know the cost of these 35,000 bottles, we would then need to do 35,000 multiplied by 3 over 35,000. So these are carriage fees. I'll just say CF so we can be able to see those are carriage fees. And then here on top, we have returns. Right, so returns, remember, these units are not available for sale. That is why we are going to subtract them. Right, and then now we're going to quickly determine what we have as our answer. So we have 1,400,000. This is a lengthy calculation over the 350,000 plus the 5,575 over 1,550, then minus 105. Okay, yeah, so let's do 35 plus, supposed to be plus 30,500, then minus the 35,000 times 3 is going to give us 105,000. So it's just simply put that in, divided by 35,000. So then that will give us a total amount of 3 rands 70 per unit. Right, so that is then how we are going to calculate our weighted average of 1 unit of cold drink, and we're going to move on to question 1.3. So, but just before we move on to question 1.3, what's best when doing this calculation, it is best to first add all these amounts together, and then you then divide by these amounts at the bottom, your denominators, because if you just simply add or just simply do this calculation, it would give you an incorrect amount. So I'd suggest that you just simply take maybe this amount and try adding it here. Let's do this, add it here with this, and then you continue with the rest of the calculation. Okay, so question 1.3, we are told to calculate the number of bottles of cold drink that were given to the employees. Okay, so that's for 6 marks. Right, so here we need to think about what was happening here. What were the movements of stock during the year? Right, so we've had opening stock of 350,000, right, plus purchases that were made 1,550,000, so 1,550,000 bottles, and then we returned 35,000 bottles minus 35,000 bottles that were returned. Okay, and then now we need to think about our closing inventory, or we could also feature our sales in there. Let's have our sales first. 1,575,000 minus 1,575,000. Right, so let's see what our closing inventory or our closing stock was actually supposed to be. Right, so we've had 350,000 plus 1,550,000 minus 35,000 minus 1,575,000. So it was supposed to be 290,000. But the actual closing inventory that we have here is 275. So we're going to take the 290 minus the 275,000, which then gives us 15,000. So 15,000 bottles were given to the employees, right? So this is our opening inventory, this is our purchases, this is our returns, and then these are sales, right? And then this was supposed to be our closing inventory before we gave the bottles to the employees, and then this is the actual that we have in our stock count. Okay, so now 1.4, we're going to complete the trading statement for the sales of cold drinks only for the year ended 28 February 2023. Remember, we were told that they use the periodic inventory system, so that was a bit highlighted in the previous video where we're talking about VAT. So that is in conjunction with the piece of information from that question. If you haven't watched it, please ensure that you do, so you can be able to know what is going on. Okay, now looking at the sales, cost of sales, opening stock, and then we're just going to quickly populate this table. We have our purchases here, and then after purchases we have returns, then after returns we're going to have carriage on our purchases, right, or on our sales, whatever you can name it. But now we are not required to calculate the gross profits. That's okay. So let's do our sales first. So we know briefly, we've just talked about the sales that we sold 1,575,000, and then each unit was sold at an amount of 9 rand each. Okay, so we're going to have 9 there. So that's 1,575,000 times 9, which is 14,000. Okay, let's have 14,175. Okay, let's do that. And then now we're going to calculate our cost of sales. From the cost of sales, we are going to have a look at the number of units that we have sold, and then we know that the weighted average unit of 1 unit of cold drink was 3.70 rand. But remember that when using the periodic inventory system, our cost of sales are determined by the opening stock, purchases, returns, and the carriage on purchases that we have incurred. Okay, so the easiest part to begin with is the carriage and purchases of 30,500 that we have already noted. And then we also have returns that were a bit easy of 105,000. Then now we need to talk about our purchases. So for purchases, what we've had over the year is a total purchases, a total purchases of 5,575,000. So that's where we need to start with our calculation. So we've had 5,575,000 worth of purchases that were done during the year. And then what is happening here is that we have given our employees 15,000 worth of bottles. Where are they? Here they are. 15,000 worth of bottles. And then now we are going to subtract those from our purchases, right? Because they are not returns, they're not carriage and purchases. We're just going to subtract them from our purchases. We're going to then subtract the 15,000 bottles, but each unit is worth 3 rands 70. Okay, that's something to keep at the back of our minds. So then we do the calculation. So it's 575 minus 15,000 times 370, and then there we are going to get 5 million. So that's 5,519,500 worth of purchases. Okay, so opening stock, we were given opening stock which had a value of 1,400,000. 1,400,000. See, right, so remember that our returns are supposed to have brackets there, and then we're going to quickly sum all that up to have our cost of sales. So we're going to quickly sum that, plus the 1,400,000 plus 5,519,000 minus 105 plus the 30,500, which gives us a total of 5,827,500. So those are our cost of sales. I'm not going to subtract them from our sales. And then if we were required to do the gross profit, we would have also been able to do the gross profit there easily. Okay, so I've included the closing stock in my calculation, but not necessarily here. So our closing stock is supposed to be the 3 rands 70 multiplied by the 275 units that we have had, and we're going to quickly subtract 1,017,500. Okay, so I forgot to write that down, but I've already had it in my calculation. Right, so now we're going to move on to 1.5. 1.5 says calculate the cost of sales for the blocks of ice for the year ended 28 Feb 2023. So we need to go back to the information number 2, where we are told that Shahar Soda also sold ice blocks at 30 rands each. So we know that here we are selling at 30 rands each. As the ice melts, they've decided to value the stock using the first in, first out, FIFO, FIFO method. They have stopped selling these when their freezer was damaged by load shedding. Okay, and then the following was taken into account from their stock records for the financial year ending 28 Feb 2023. And then the, the information that we're given here, the blocks of ice, we know that they use first in, first out. So we have the opening stock on the 1st of March 2022, and we've had 300 blocks, purchases 1,200, and so on and so forth. So we have some extra pieces of information. Information A says there's no carriage on orders over 200 blocks, right? So we've made orders above 200 blocks, so we have not incurred any carriage fees, so that is okay. And then secondly, 250 blocks that were purchased in May 2022 were given free of charge to customers who placed bulk orders. Okay, so 250 blocks that were purchased in May 2022 here were given free of charge. Okay, that was free of charge to customers who placed bulk orders. Then lastly, we have 100 blocks of ice purchased in May again. They melted in June 2022, and then the rest were sold. So here, the 100 blocks that were purchased in May 2022 melted, which means from this 800, we need to subtract 100 and also subtract 250, but we'll just get into that so we can see how we are going to approach this question, because the 100 blocks of ice, they melted, and we are necessarily not going to be able to sell those blocks of ice. Okay, so here on 1.5, we are required to calculate the cost of sales for the blocks of ice for the year ended 28 Feb 2023. Right, so first things first, we know that everything that we have had in our opening stock, the 300, was sold because that is our first in, first out. So the cost per unit was 9 rands. We're going to have the 300 units multiplied by 9 rands, which will give us, so that's 3 by 9, 2,700. Okay, and then secondly, we have had those that we have bought in March. We have no information on those, but we are going to assume that we have sold them March 2022, 400 blocks. So we have March, that's 400 multiplied by the cost per unit. Let's have a look. That's 8 rands. So multiplied by 8, so it's 400 times 8, which is 32. So that's 3,200. 3,200 rands. And then lastly, the ones that we have had in May 2022, remember we have had 800 multiplied by the 250 that we gave free of charge, multiplied by the 100 that we were not able to sell because they melted. So actually we have sold 800 minus 250 minus 100, which is 450 blocks, okay, at a cost of 7 rands per unit. So 450 multiplied by 7 rands per unit, which is 3,150. Now we're going to determine the total cost of sales. It's 3,200 plus 3,150. So that is going to be 9,050 worth of sales. Okay, and then 1.6 says the owner has received a quote of 4,800 to repair the freezer. Remember, they told us the freezer was damaged due to load shedding. So now we are back here and we're trying to repair the freezer at a cost of 4,800. Now we need to explain why it would be a profitable thing for the business to repair the freezer when the value of the ice that melted was less than 1,000 rands. Use figures to support your answer. Okay, so what necessarily happened here is that we have the ice that were melting, so their cost was even less than 1,000 rands. So now we need to think about, are we going to make a loss when we repair the freezer, or are we just going to make more profit even if after we pay? So we need to calculate that and actually see how we're going to do this. Let's look at our sales amount first, right, to determine the revenue that we have earned. So we have earned 30 rands per ice block that was sold. So we have sold a total of 300 plus 400 plus 450. So 300 plus 400 plus 450 will give us 1,150 ice blocks sold, right? So the 1150 multiplied by 30 rands is 34,500, right? So that's 34,500 what we have earned from the sale. Now we are going to take the 34,500 and subtract the cost of sales, right, to see if we've made profit. Cost of sales, we've just calculated them to be 9,050 worth of cost of sales. Now we are going to have the loss that we have made of 1,000 because we have lost 1,000 worth of ice blocks, right? Remember, they costed us 1,000, which is just what we've been told, and then minus 1,000. Now let's see how much we have made. It's 34,500 minus 9,050 minus 1,000. So we have made a total of 24,450. Okay, but now we need to think about, okay, what if we take the 4,800 from the 24,450? Are we making a loss or a profit? It's quite clear. We have 24,450 minus the 4,800, which will then give us, let's see, 19,650. See, so even if we are able to pay for the quote of 4,800 to repair the freezer, we're still making a profit. We're not making any losses. So we need to make a comment here that the business, or Shahar, the business still made a profit of 19,650 after paying for the repairs. Right, so this is necessarily what would happen if we were to go on with the quote of repairing the freezer. Okay, so that is it with our inventory systems question. Thank you so much for joining. Thank you for watching once again. I hope that was quite useful to you. Please do not forget to like, subscribe, and drop a comment about any accounting topics that you might need help with. I'll definitely see you in the next video. Cheers.